It's episode number 66. Today is Wednesday, September 9, 2020. This is the 39.6 Facebook Live Finance Show, the show that teaches high earners like yourself how to make your money work for you so you don't have to work for your money. We talk general investing, taxes, real estate, syndications, Airbnb, and even the car you drive. All right. If anybody's out there and you can see or hear me, please let me know so I don't do a whole episode that doesn't work. All right. We have one viewer in here. Please let me know if you can hear me. All right, this is going to be a quick episode. It's going to be part one of cash balance pension plans. All right. So I have alluded to this multiple times. And yesterday I did episode 65, which was you only have one portfolio, which is essential preamble to the cash balance pension. So first of all, what is it? And this is a very complicated thing to explain. Sometimes it's easier to explain by what it's not. What it is a huge, huge tax savings tool that is completely legal. It's not even anything that is a red flag to the IRS. It is a qualified plan. Okay, so a qualified plan, a pre-tax plan that the IRS gives the green light to. So something like a 401k, the IRS encourages you to use them as your way to save on taxes. Okay, there are a lot of other ways that the IRS does not like. They have their naughty list, things like those charitable donations that people do with land, which I'm blanking on the name of right now. But yeah, those are big red flags. Those are on the list of IRS transactions that they look out for. A pension plan is a qualified plan that is through your employer. A cash balance pension, yes, Facebook user. I spent over an hour on this talk at WCICon 2020. It was about an hour-long talk, yes. So this cannot be covered in one discussion online. I'm probably going to just cut this off at 10 minutes. It is a qualified pre-tax plan. So it is something the IRS wants you to do. Okay, they say, this money is safe. We are not going to go after you for doing this. This is the best way to save on taxes because it doesn't actually even show up on your W-2 form. Okay, so a cash balance pension or any pension is an employer contribution. Your employer puts that money into a pool and you don't receive it, which is the best way to invest your money. You don't actually ever want to see, touch, or feel your money. If that money is diverted by your employer directly there, like with a 401k, that money is asset protected. Okay, it is ERISA qualified, ERISA, E-R-I-S-A. I don't know what it stands for, but these are the guidelines, these rulings that came out to protect your assets like a 401k or a pension plan from creditors. Okay, nobody can go after your 401k from a job. Now, if it's a solo 401k, that's a different situation. But if you're employed by a bigger company, then yeah, it's ERISA protected, and so is a cash balance plan. A 403b, 457b, IRAs, these may be asset protected to various levels depending on where you are, what kind it is. But a cash balance defined benefit plan or any pension that follows pension rules, these are ERISA qualified. Okay, so these are super, super, super safe places to have your money go to save on tax and also protect you from creditors. It is basically a free form of asset protection. You can't easily protect assets compared to this method because it's by definition, by the United States government law, it is asset protected. You can form LLCs, trusts, all sorts of things to protect assets. Those are very expensive ways to protect your assets. And even those can potentially get broken down in court. But this is the United States government saying, hey, this is protected. Okay, so how much can I put into a cash balance pension or any pension? We're going to focus on cash balance, and we're going to get into the meaning of cash balance later. But how much can you put in is really what the most common question I get is. And the reason why this is so complicated, why people often don't talk about it, is because it's not like a cut and dry, very easy to define thing. It's not like a 401k. We can say $19,500. The limit is highly variable and depends on so many factors. And an actuary has to do this. But the limits can be super high. Okay, so I go to a website called cashbalancedesign.com. It's from Kravitz. They are an actuary company who specializes in cash balance pensions. And they have a little table here with your age and the maximum you can put into a cash balance pension. These are theoretical maximums. It depends on other testing rules. But for example, they've increased their table for this year. It goes up to age 70. And it says for age 70, you could put $343,000 in pre-tax. That's unbelievable. Please tell me any other way that you can put in that much money pre-tax into a qualified account that's asset protected and that the IRS is not going to fight you over. There is no other way to do this. Now, if you're younger, it's not as much. If you're age 30, $60,000. It's still $60,000 above and beyond your 401k. So your 401k, you can put in $19,500 as an employee. And your employer can put money in too, and those two employer-employee combined can't be more than $57,000 this year for people under the age of 50. So you could put $57,000 in it if you're age 30 and $60,000 for a total of $117,000 between these two things. Now, I got a plan going with my group last year, and at my age, based on our actual analysis, I was able to put in $91,000. So I got $91,000 in addition to the $56,000 I got in last year between the 401k employee and 401k employer contribution. So $56,000 plus $91,000 is $147,000, all pre-tax. Okay, all ERISA protected, ERISA qualified plans. So that's all asset protected money. Creditors can't go after that. Okay. And the pension money doesn't even show up on W-2. So it's like, I never even received it. It goes into the pension and I am the beneficiary of that money after I leave or what other things. So that's going to be in a separate topic, but this was just the teaser. So how else can you save like almost $400,000, actually more than $400,000 between a 401k and something else? If you're age 70, you can do that using a cash balance pension. It's unbelievably amazing and powerful, and the most valuable tax savings tool you can have, potentially. And nobody ever talks about it. That's why we're doing this. All right, until tomorrow, when we do probably part 2 of this, or maybe another topic. I don't know. We shall see. Again, this is not legal, financial, or any other formal advice. This is just me talking to a microphone, you listening, and me having a good time. Maybe you having a good time as well. Until tomorrow, and that'll be episode number 67. Invite your friends to our Facebook group. We are at like 480 members. So excited to see the growth. Have a great day.